Gold soars over $4,000 and Bitcoin flounders just above 100,000. Is gold the actual debasement trade? Bitcoiners down bad and sometimes get mad at the fact that gold is ripping. Welcome back to Bitcoin Season 2. We're talking XAU.
Bitcoiners down bad. And sometimes, what did you say, big mad?
Big mad.
That was good. So my dad's been doing victory laps on our phone calls recently because Bitcoin is, as you said in the cold opening, floundering, and it's still up significantly year to date, year over year. But gold has just been making headlines, and of course he's a huge gold bug. He's got a little Bitcoin, but he's always been like, I just think when push comes to shove, it's people want gold, and I think you need to diversify a little bit and get you some of that gold. And I was always saying, yeah, Dad, I just think that Bitcoin is more asymmetric upside and all that stuff. But the gold bug boomers have been having a field day this year. And you got to give them credit. Gold has been stealing the show and is really back in the spotlight as the hedge for currency debasement, specifically here in the US. And, you have these social media posts of people lining up at pawn shops and gold
I don't
brokers.
see people lining up at pawn shops to buy Bitcoin.
And people were saying no, you don't. But people were saying oh, that's the top. And I think that's just, if what we're talking about on the show today is true, the trajectory of what we're going to be discussing is true, then it's just really the start for this. And I have to say, shout out to the gold bugs and the boomers. They lit the torch for many of us, so you got to give them props, even if they don't understand why digital cash is superior. But ultimately, gold has been doing really well this year, and Bitcoin has not been doing as well as a lot of people would hope. And we're going to get into exactly why that is. All roads lead to China. It's not Rome. They actually lead to China in this case. And we're also going to talk about some of the other geopolitical factors that might be influencing this, specifically rare earth minerals, things that you might not think about.
Yeah, I listened to a whole Luke Gromen podcast in preparation for this. So you're just getting, from me, you're just getting regurgitated TFTC Luke Gromen slop. But from Colin, you're going to get a little more elocutionary depiction of what is going on with gold. And yeah, if you think we're idiots because we are gold bugs in a way, maybe we're just hype boys who jump on the latest bubble train. I don't know. You must have forgotten that all the old school Bitcoiners all kind of like gold. And guess what? Not much has changed. It's the same thing.
Yeah, 100%. And big shout out to Luke Gromen and Marty Bent. We will be playing some clips from one of Marty's most recent TFTC podcasts. Luke Gromen is a repeat guest on TFTC on what Bitcoin did. He kind of makes the Bitcoin macro circuit along with Lynn Alden. But he and Lynn just provide really clear and lucid insights into a lot of the macro forces that are driving markets. Highly recommend that podcast for anyone who's interested in it. We'll link it in the show notes, and we'll also be playing clips from it here in a second. But to put an exclamation point on my opener there, this is Bitcoin and gold year over year. Bitcoin's actually up against gold year over year. We can do a little cheer there. But if you look at year to date, it is a much different story. Bitcoin's only up about 13%. Let's see, I have two different. I have Bitstamp on, let me just, here, there we go. So it's up 14% year to date. Gold is up 51% year to date. And I also have the dollar here down 9% year to date. So overall, this shouldn't be a surprise to anyone who's been paying attention to the news. Gold went on, I think it was like a 9 or 10 week run, basically up for 2 months plus.
It's been nuts.
And it just, it topped out over about $4,500 an ounce, I believe. And since it has corrected to about 4,000 as of the current recording, or as of a recording.
Yeah, like it dipped below 4K, and now it's up on the day. So this is Thursday. Yep. You're listening to it on Saturday, probably over the weekend. anything can happen in 48 hours. That's a long time.
It is a long time for sure. And so it was just under 4,400. Just wanted to correct myself there. Dollars an ounce, like 4,360 or so. And as Charlie said, it's now bouncing back after dipping below 4,000. But as we'll talk about at the close, I think this rally is very frustrating to Bitcoiners because, as we will talk about here, gold is serving what Bitcoiners in their feverish dreams, in their most feverish maximalist dreams with Satoshis dancing in their head. Gold is serving that function currently.
Yeah, and just to emphasize this, like the rise of the Bitcoin macro commentator, the rise of the Bitcoin macro podcaster, which I guess we are now that too, was really defined by Bitcoiners owning this narrative and creating this myth that Bitcoin was the debasement trade. And while it has been since then, it's performed better than gold since then. This year, the tables have turned. Bitcoin is now really just an underperforming asset relative to like the S&P. And gold is just unrelenting and has all of the narrative wins behind it. And we'll get into the geopolitical wins behind it.
Why has gold been rallying? Well, look no further than to the east, Western man, at China, because the Chinese have been buying up gold at a record clip. So this is the Shanghai Futures Exchange gold inventories. We'll talk about the Shanghai Futures Gold Exchange here in a minute.
But for the audio listeners, what's happening? What's this chart?
So if you're on audio, I'm showing a chart here, and this shows the inventories at the Shanghai Futures Exchange, gold exchange in Shanghai, China. This is basically like their London gold exchange. And it starts ticking up in 2024, and then it explodes in 2025. For the sake of the listener, it basically increases fivefold through 2025 from where it was in 2024. And what this story tells is there are two stories being told here. One, Chinese banks and the Central Bank of China is hoovering up gold. Number two, China is also courting international banks, central banks, private banks, to store gold in their Shanghai gold reserve. So obviously this serves two functions. You want to buy up the gold, and then you want to have one of the major markets for the gold. And we'll unpack what this means in terms of gold serving as more of a neutral reserve asset in a little bit. The TLDR here, and I'll play this clip from Luke Gromen, is that ultimately banks are starting to de-risk away from the dollar and U.S. treasuries. And for China, this serves a very important strategic purpose of they can decouple from U.S. financial markets, or specifically from the U.S. dollar system, at a time when they are restricting rare earth minerals from the U.S., which the U.S. needs to impose themselves militarily on China to get them to do whatever they want, right? I mean, the dollar system has been in part propped up by oil, but also by the U.S. military complex, right? And so, as Luke lays out really well in this TFTC interview, there are multiple geopolitical factors at play, and gold is kind of the fulcrum of what we are seeing in the FX markets and in the currency markets, where it's starting to get to a tipping point where gold might be the dominant neutral reserve asset in central banks around the world instead of U.S. treasuries. As Luke points out in this TFTC interview, we may have tipped that scale. We don't really know yet, but it may have been tipped on this run recently. But I want to play this clip really quickly from him that kind of lays out this thesis of the fact that we're seeing the dollar run up with gold. And that's because countries are buying dollars to settle dollar-denominated debt to get out of treasuries. And they're also buying up gold concurrently with that so that they can have a piece of this new neutral reserve asset that they can then use for liquidity outside of the dollar system.
Gold, once it hits critical tipping point of price, and I don't know where that price is, but you can see hints of it. Albert Marco on X has said, hey, above $3,000 on gold, it starts to create a problem for the dollar. He was right. The dollar went down to 96. It says above $5,000 on gold, it creates a problem for the dollar and for the treasury market. He's probably going to be right. And the point here, or what he's saying when he says that, is ultimately Yes, there is this, we've talked about this, $13 trillion dollar denominated liability out there, right? In terms of foreign borrowed dollar debt, that when the dollar goes up, it squeezes people into that. It forces them to sell treasuries. It forces them to sell U.S. equities to raise the dollars to get that. Well, once the price of gold gets high enough, it starts to fully collateralize their dollar liability on the other side. And suddenly it starts to provide the liquidity. It starts to be the sink. And that is how you circumvent. The gold is how you get out of the dollar system. And that's why a friend of another said all those years ago, when you see them go up together, that means the dollar is coming to its end of life. This present form of this dollar system is coming to the end of life. Now, does it mean the dollar's going to die? No.
Whew. Dollar coming to its end of life when we see these things.
And he goes on to say that doesn't mean the dollar's dying or going to die, but it just means that in a world where it's no longer the neutral reserve currency of the global financial system, it'll be worth significantly less. Which also goes back into the whole effort to reshore American manufacturing. This is a necessary trade-off. You're going to have a weaker currency to do that. Luke talks about that as well. Earlier in the interview, he ties this back into the rare earth thing. We won't play that clip. Well, I'll just break it down here. But for those who have been following the news, China recently said that they're not going to be selling rare earth minerals to the U.S. They also tried to extend their export controls over rare earth minerals to the refined product and technology, which is kind of an unprecedented overreach. This sparked a outreach or backlash from President Trump saying he's going to double Chinese tariffs. And this has led to increased negotiations at the trade table. But the basic idea here, as Luke ties it into the gold buying, is that if China restricts exports of these rare earths and they have gold as a neutral reserve currency, they have even more leverage over the U.S. when it comes to trade negotiations, because the U.S. can no longer produce the weapons necessary to attack them, to make them do what they want them to do, or they also do not have the financial tooling through the treasury market to force them to do something, because now China has a backstop with gold. So ultimately, it spells very bad things for the dollar long term. As Luke said, even though the dollar may be going up on a short-term time frame over the last month or so, that does not mean that it will hold as countries continue to rotate out of treasuries. And a thing to watch here are the BRICS nations: Brazil, Russia, India, China, South Africa, though they're not as big of a player. They have been very vocal over the last decade about moving towards gold, or a neutral reserve currency that is not the dollar system. And China is leading the charge here. And it's a wake-up call, I think, for a lot of Bitcoiners, for the fact that, yes, like, Bitcoin is amazing. We think it has better monetary properties than gold for what gold does. Fact of the matter is, gold has a millennia track record, excuse me. And that is currently what the central banks want as they continue to lose faith in the dollar and the treasury market.
Yeah, and so the other thing which is really interesting is we're going to put on our geopolitical analyst hats here, which is a lot of this does come down to the rising tensions between the U.S. and China, which does come down to a lot of military or cold economic war, in a way. I'm not really sure what the right term is, but there's a reason we don't go to war directly. The reason why we go to hot war, is because nobody really wants that. But to borrow my Jason Lowry reference, it's a projection of power, bro. Projection of energy and money, and that is really kind of true. And so, Colin, you also have good insight from Luke Groman, who has some good insight on this topic.
Yeah, so going back to the rare earth piece, this interestingly also ties in recently to the Treasury's activity in Argentina. They propped up the Argentinian peso recently. Trump administration was kind of excoriated and lambasted for this, depending on who you were talking to. It's like, this doesn't seem very America first. But it turns out, in retrospect, they actually bought the bottom of the peso market, and they actually ended up profiting from it. And there was an interesting tweet that I saw regarding this as well. All right, so we have yet another Luke Groman tweet here. And he says, do you see the game plan here in Argentina based on this Scott Bessent interview on Fox News? which is basically part of this deal with Argentina is to get as close to them as possible so that we can maybe tap into their rare earth reserves. People might not know that South America is actually home to quite a lot of rare earths. This is a chart from Newsweek that I have shown up here for those of you listening. It shows rare earth deposits around the world. South America is pretty rich, and North America is pretty rich as well. So, I can't speak to our ways out of the dilemma of relying on China for critical minerals for our military supply, but this all funnels back into the America First movement in some way, in the sense of there is an urgent need, really, from a national security issue to produce some of these rare earths, at least in our hemisphere, if not onshore. Also, to build refineries for them here and to build out the manufacturing capacity to, build anything from military technology to smartphones, etc. So the fact of the matter is, there's like a perfect storm of geopolitical events right now that this administration has inherited, and whether or not they can actually solve these issues with what they've been doing so far with tariffs or with intervention with other markets like in Argentina is TBD.
So how do we make this about Bitcoin?
I think it just goes back to the fact that Bitcoiners are in disbelief that they're sitting around watching the boomer rock outperform their precious coin year to date, when really you've not been able to pick out a time frame over the last since Bitcoin was created and had a market price where it hasn't outperformed gold, really, except for a very few cherry picked. This might be one of those cherry picked in retrospect. Bitcoin could explode over the next few months, right? But at the fact of the matter is, this bull market has been very underwhelming for people, and gold is serving the function of a neutral currency that, again, Bitcoiners dream Bitcoin eventually serving, right? And the fact of the matter is, it's just not there yet. It is a, speculative investment for most people in the US, and for other dreamers who use it as a unit account and a hedge against currency debasement. It is that currency debasement trade, but it's that for plebs and retail. It's not that for institutions yet.
I mean, we did a lot of good narrative creation over the past few years. One, Bitcoin is digital gold. So if gold goes up, then if Bitcoin's the digital version of that, then, that's a good strong tailwind at our back from a narrative standpoint. And then we also did a lot of good narrative creation to say, and Satoshi even, responsible for this, like, you can teleport gold anywhere. Satoshi uses this analogy of like a boring colored rock that you could teleport anywhere. And then on top of that, like, it's fine for us to not be the belle of the ball for 1 year. I mean, take a breather. Bitcoin's over 100K. It's done pretty dang well over the past few years.
Yeah.
And we often forget that we're so impatient. The boomers have been waiting for this for 40 years. So, let them take a victory lap before they all actually retire. And because we do have the young youth momentum on our side, which is, I think it's hard for me to imagine my generation and younger buying much gold or being like structurally bullish on gold. And we are kind of the future economy of the world. So
yeah, and a few notes on that maybe to wrap up. I think that this move in gold shouldn't be that surprising. Gold really has lagged behind traditional markets since the Great Recession. It performed really well after the Great Recession and then tanked. And then in ZERP land, it hasn't done anything. Or in ZERP land, it didn't do anything as equities were roaring to all-time highs and the tech boom had its revival. And Goldbugs were beating on the drum about how unsustainable all the debt is and how all of the ZERP policies were going to create bubbles. And now they're right, and people are running to a hedge. And this is long overdue, I think. The other thing I will say is that if you're a Bitcoiner, this should make you bullish. Gold's market cap has gone up by 50% over this year, or year to date alone. And, if you're bullish on Bitcoin long term and alternatives to fiat-based monetary systems, Bitcoin's ceiling just went up too.
Yeah.
I've always looked at gold as that's the mark to get to.
Yeah.
that ceiling
That's
just
the high
went up.
watermark that Bitcoin's gonna get to eventually. It's a matter of time and path. Agreed.
100%. And if you think that, like you said, that younger generations are going to gravitate towards a globally decentralized, digital form of this scarce mineral that humans have coveted for thousands of years, then it only stands to reason that Bitcoin does play a role in the monetary debasement trade and the dollar losing its current global currency reserve status. It's just right now that role is not as big as some Bitcoiners want. The fact of the matter is Bitcoin is now starting to trade with returns that are matching the market, and that pisses some Bitcoiners off. And I just think that people have gotten spoiled. If you bought during COVID, you're up like 500, percent. Yeah. So, it still performed wildly well. I think it's good if it doesn't get a crazy blow off top. If we actually do see the 4-year cycle break down, and that means less volatility to the upside, that's ultimately very good. And that'll actually help Bitcoiners accumulate Bitcoin at a lower cost average probably over time.
So there you have it. If you didn't turn this off because I had a bait hook saying Bitcoiners are mad about gold going up, thank you for making it to the end of the episode. We are going to do this every week. What do you want to hear us talk about? Drop us in the comments. Drop that in the comments. Give us a review and hit me up. Blast me on Twitter at CBSpears. And don't blast Colin on Twitter as I lay hodling, but you can if you want to. Otherwise, see you all next week.